Hey there, welcome back. So this is a really simple Heiken-Ashi strategy, and it's surprisingly effective when you just stay patient and wait for the right setup. Now, the basic idea is this. You wait for a sideways or range-bound move, like this area here. And we are not trying to predict what happens next, right? We are just looking to execute at the right location at the right time. So it's really about waiting, waiting for that A plus setup. So here is the logic behind it, all right? So in the Heiken-Ashi chart setup, and when you see a particular trend developing, it's usually followed by at least one or two more bars of the same color, right? Like this here, here, and here. Even though you can use this during the, you can of course use this during the trending period as well as the sideways move period, but just be wary of using it during the high volatile period where it can easily whipsaw and the stop had to be wide, but otherwise you can still use it. So the idea again here is, so when you get, for example, a bar like this, you after the close of that bar you enter, and then your stop will be somewhere at the lower end of that bar, and then you can expect it to go at least till the end of this range. And I'm using these custom buttons, and so all this basically is, it uses the previous bar, and if I say sell high, it places a limit order at the high of the previous bar. So if I'm on this bar currently, time remaining, and it uses the previous bar as the reference. And so this, for example, places a limit order at the middle of the body of the previous bar, or sell low is like the limit order at the low of that bar. And this is similar thing, but for buying. And again, it uses this bar as the reference, just the bar that closed before the current bar that we are on. So let's jump into the actual trade here. And this is from the previous live session, real trades taken during the real time. And here is what we have got, right? The market tried to break out of this opening range, but it did not make a full break. It came back inside the opening range. And this is the regression channel indicating a slightly upward bias. So let's start this chart here. And now that I have seen this red bar,
Order
I have
submitted.
placed a limit order right at the middle of the
Order
previous
submitted.
bar,
Order submitted.
and I was little bit chasing here, got two orders placed, and I have moved the target of one of the orders here. I have a slight drawdown at this time. So it's going positive. So hit
Order
the first
filled.
target here. But I was little bit greedy here. I should have moved the remaining position to at least break even, or close it right now. Instead, I was more optimistic that it might reach the end of this range, but instead it has not reached the end of this range, so it can go there instead. So that was the slight mistake there. So like this, in real-time trading, mistakes can
Order
happen.
filled.
So I closed that because I got a green bar here, and now I'm trying to
Order
go
submitted.
long. So instead
Order
of waiting
submitted.
for it to retrace or
Order
anything,
order
I just
submitted.
placed
Order sub
4 or 5
order
positions
submitted.
right at the high of the previous bar. And this is a risky proposition, and so that's why it's
Order
better to
failed.
keep a single or 1 or 2 positions. But I just took a chance there, and so it hit the target this time, but sometimes it can backfire. And also by default, this places the stop at 50 ticks and target at 25 ticks. But if I hit X2, it changes the target to 50 ticks. So now that I see this long wick here, this is end of this range. And now I can expect it to
Order
reach this
submitted.
range.
Order
So the order
order
is being
submitted.
placed at the middle of this wick by clicking sell
Order submitted.
wick top button. But unfortunately it did not fill, it missed by a tick. So now in order to uh, have the orders filled, thinking that it is running
Order
away,
submitted.
I am clicking the sell low button, which is
Order
placing the limit
order
orders at the
submitted.
low of this bar,
Order
but they
submitted.
are getting filled
Order
because
submitted.
I'm getting a better price here. So I have the fill for 4 positions here, and I'm still keeping these orders here, and I should better cancel, but I'm okay because I still have these stops here. If I get filled here, it will be like a daisy chaining. And so right now I have a good target. So if I could just close everything, I can still get a decent profit, but it has moved away. I have not moved everything to the break even either. So at this point, I'm just waiting for either these earlier limit orders to fill, and if it goes against me, I'll close the current positions and the new positions will have a stop somewhere here. But that is still a huge risk. So if I don't want to take this risk, I can just limit my number of positions to just 1 or 2. So at this point, everything is holding and I can move couple of targets till here. So if it breaks below this middle of this regression channel, it has a higher probability of moving till there. All right, so it is getting
Order
closer.
failed.
So it hit
Order
couple of
canceled.
them. Okay, so I just left with 1 positions. I can move at least this one here, but at this point, I'm okay to hit the daily goal
Order
by
canceled.
keeping it where it was. So that was closed. So in here, this is the total PNL. This is the unrealized one if there are any positions open.
Order
And this is
canceled.
number of position. So at this point, I closed or canceled the remaining limit orders that I was waiting for here. And I will call it the end of this session. So basically, how this setup works, it's not risk free. Nothing in trading is risk free. For example, if I had taken a short at the end of this bar and the stop is somewhere here, then it's okay. It still did work. But instead, if I am looking at this green bar and trying to go long here, you probably don't want to go long here at the end of this range there. On the similar token, going long here was risky, but it just filled at this point. But instead, since we are already at nearing the top of this range, you could have just waited instead of going long there. It did work this time, but generally it's better to skip that and then wait for this red bar once we are at the end of this range. And also sometimes there will be a range break after a couple of bounces. So instead of even after this red bar as a minor pullback, it could have gone higher. And in that case, it can, still stop me out. but so that's why it's better to keep the positions to 1 or 2. So the key takeaway here is, be patient, wait for that clean range or, sideways setup. Avoid entering near the very end of a move. Sometimes it's better to skip a few trades and wait for the next range to form, where the risk to reward is cleaner and more predictable. So, all right, so that's the recap, simple, methodical, and all about timing, not necessarily the prediction, but the probabilities. So let's keep it fun, keep it disciplined, and I will see you the next time.